Hey, evening everybody. How are we? Hope everyone is well. Thank you for joining me on a Sunday evening, 9 p.m. as usual. So the last couple of weeks have been interesting. I've been doing a little bit more news type stuff, certainly with obviously the Bank of England base rate, no movement there in complete defiance to what everybody was expecting was going to happen. So what I'll be doing is on the channel, certainly next year, providing a little bit more commentary on some of the news items that will be relevant to people in this space from an investing point of view, even from just simple, just like day-to-day money point of view as well. So that's going to become a feature through next year. But yeah, I think this one is just about kicking it with you, answering some questions. We had Gary on last week. That was a really insightful conversation. We do have a live next Wednesday. So this coming Wednesday, it's going to be on I can't remember the dates now, but this Wednesday, essentially, I think it'll be like the 10th or so at 8 p.m. We're going to have Andy Webb come along, who is basically, he runs Be Clever with Your Cash. It's a blogging website. He's very, 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 very good at helping people get organized with their finances and understanding how they can get the best deal out of shopping about. So this will be very, very useful this Wednesday with regards to helping people prepare in the run up to Christmas. So we're going to be covering a lot of stuff there, but that's next Wednesday. That's going to be the 10th at 8 p.m. So Andy's going to be on with us then. So that's going to be our midweek live. There'll be some bits and pieces landing through the channel through the week as well. So yeah, as always, this is all about me answering some questions. Said a lot has happened. Stocks are still pretty high. Bitcoin still at that 60,000 mark. So I'm sure that there'll be some crypto questions or some stock market questions as well. So let's get to it. I know that there's a couple of even in GT. How are you, mate? Really, really good. What are my current thoughts on trading 212 as a company? You know what? I've got my portfolio with them, and actually, funny enough, this evening I am actually going to allocate my picks with trading 212. It needs to be done. To be honest, I've not really paid a lot of attention to trading 212 for quite some time now. Obviously, they're changing their T's and C's. I think the trouble that you have with a company like that is because they started out with the platforms free, and then they get to a place where, and this is through no fault of their own, this is because of the fact that they've just been so successful in, I guess, attracting investors, that essentially what's happened is they struggled with the execution of the orders and just general service because they were just so popular and they got so much growth so quickly. Um, they're almost a victim of their own success. And then when you fast forward and look at how those problems start to escalate, they then have to start introducing fees here and there. So the FX fee of 0.15% where they didn't have anything before. That is clearly going to put a bad taste in a lot of people's mouths, because you're always led with that free kind of like monetary kind of like system to make it free and accessible to people. And then obviously you compound that with, the T's and C's and some of the things that have been highlighted there. And I've spoken about, and a lot of other YouTubers have spoken about as well. It's one of those things where, as a business, obviously it's their business. So it's their right to make sure that they're in the best place from a commercial point of view, and from a point of view that they want to be able to continue to be around for some time so that they can continue to service their customers. That is their right. But I think one of the things that they definitely could have been better at is communicating with people. Their communication is really, really bad. Like really, really bad. Like, try getting an answer out of them for just simple questions. You can barely get any questions out of them, answers out of them. And I think that's where they've fallen down. But, I think they're not the only fish in that pond. And I think that's good. I think competition means that when you have a pool of companies that are doing relatively about the same thing, that because there's competition and because they have to kind of like fight for your business, for your custom, then it means that they have to be a bit more competitive within the service offering, the rates and the fees that they also charge. And I don't necessarily think that Trading 212 have adjusted for that competition, because they are still the biggest. Well, They're the biggest fish in that pond in regards to the UK specifically. I mean, the closest one to them is probably eToro, but eToro is a very, very different like proposition. You think about free trade. Okay, they've only just got 1 million followers, users, sorry, and their business model is not exactly the same as Trading 212. They never started with it being completely free. Obviously, you've got to pay £3 a month for their ISA wrapper. Then you've got the membership thing as well, which is $9.99 or something like that a month, which gives you access to other ETFs. So they're kind of like standalone. But as a business, I'm just so disappointed that they're not opening accounts anymore. I mean, it's been a year. It's coming up a year now. We've been 11 months since they've opened any accounts. They're opening up in Europe, and I don't know whether it's a Brexit legislation type thing. Probably isn't, because if that were the case, then you would question how they're actually servicing UK customers at this point in time. I could be wrong, but as a business, I think they're just in a position where at the minute they're just kind of trying to consolidate their position, trying to get their their affairs in order. And they've got the right to do that, but hopefully they don't alienate the existing customer base. I mean, those are just my views. I could be completely wrong. Let's have a look at this. I'm good, thanks, Food Dollar. I wanted to register for InvestEngine, but some of the ETFs, they don't give information whether your investing is passively or actively managed. It's an ETF, mate. So a lot of them will be passively managed because they're ETFs. That's the nature of an ETF, unless it specifically says that there's an active management behind it. Most of them in InvestEngine, I believe, are pretty much all passive management approaches. So they will all be passive, mate. All of them will be passive. Hope that helps. I know you've listed an example there. They will all be passive as far as I'm aware. Yeah, I'm just looking at your follow up there. It will definitely be passive. I could be wrong, but I'm 99.99% sure that it will be passive and not active. Rui, how you doing, man? Good evening, Pete. What book would you suggest to learn the basics, terminology, charts, interpretation, source information, taxes for stock investment? Good question. You know what? I don't have a book that immediately comes to mind. I didn't learn this stuff from reading books. I learned it because obviously I was in the industry and I did qualification. So I haven't approached it from where you are specifically. So that's a really, really good question. I can't give you kind of like a direct recommendation for a book. What you can do, though, is you can visit sites like Investopedia. Investopedia are very, very good at breaking down simple like terminology, if that's what you're looking for. Yeah, Investopedia is really good, but I can't think of a book specifically because I didn't learn everything that I know from reading books. I read books for qualifications when being a financial advisor. That's how I learned the stuff, and just by being around it for such a long time. So I don't have a specific book, but resources like Investopedia will help you online. They provide pretty good basic, easy to understand explanations for a lot of the terminology that you'll come across. Andy, mate, how you doing? How you doing? Good to see you here, bud. I read somewhere that only 5% of the adult UK population have a Stocks and Shares ISA account. This sounds crazy to me. I'm glad to be part of the 5%. No, mate, it is true. It is true. And again, this is where, the education matters, because if you didn't know that you could put, so there are probably a couple of ways of looking at this. First and foremost, not a lot of people know that they have £20,000 as an allowance that they can put into an ISA, which will be tax-free and will be tax-free forever for as long as it's within that account. And also, when you draw an income from it, you can also keep your income tax-free. Not that many people know that because we don't get taught it. So unless you're seeking the information out, then you're not going to know it. But to compound that even further, why are you going to go looking for an ISA account if you're in a position where you don't have enough money to spare to actually be investing? So you can get into the whole conversation around this social structures, social classes, and mobility between the two. And I don't know, the video for Friday, not very popular again because I didn't keyword research it and it's not particularly sexy. But people like Aaron, who was on the podcast this week, and I put the video recording of our conversation for the podcast up on Friday. He's a prime example. Just like myself, come from a very, very poor background, but now he's been able to navigate and get himself through social mobility to a position where he is now in a better class, and he's mixing around with high net worth individuals who are his clients, who he does work with. That transition is very, very difficult to make, and a lot of people actually struggle to do that. And this question really is layered with that kind of existence, that kind of factual reality of what we all face on a day-to-day basis. If you're not lucky enough to be born as part of the 10% or 5% or even 1% of society, right? If you don't have spare money and you're fighting to make ends meet on a month-to-month basis, and ISA is probably the last thing that's on your mind. I know for a fact with me, ISAs, why would I want to talk about an ISA if I'm literally struggling, living paycheck to paycheck, and I'm literally watching every single penny? So I guess education is really, really important, but everything else that goes with it in terms of being able to earn enough money. And when you are earning money, the money management, that kind of stuff really, really sort of matters. But that number is correct, mate. It's 5%. And it is shocking. It really, really is, because you would think that more people would actually have an ISA. A lot of money is sat in cash, unfortunately. And, I spoke about it on the video this week with the Bank of England. If inflation hits 5% by the time we get to Q2 2022, people are going to feel it. That's really, really going to hurt in terms of our day-to-day spending. It's really going to hurt. And unfortunately, because the Bank of England didn't move the interest rates up like they were supposed to, or as it was being anticipated that they would, it means that essentially we can run to a point where we feel as though the cost of living is going to get way out of hand, and whatever Rishi gave in the budget is not going to be enough to be able to compensate for that. And it's really, really unfortunate, to be fair. But yeah, it's crazy, mate. Hey Pete, what are your thoughts on Elliott Wave? Do you think it's useful in predicting to some degree what will happen in the stock market? Explain to me what Elliott Wave is. It's not one that I've come across before. So give me a brief breakdown of that, Simon. I can give you my view on it. Andy, let's have a look at this. Okay, I'm planning to buy more VOO on eToro, but they keep reaching new record highs. That really scares me. Yeah, I mean, mate, this is the problem, right? A new high is a new high. And I say this with a little bit of trepidation, because obviously when you have a new high, the fear is it could trail off again. Okay, but the reality that you face is, well, it's a 50-50 game. It could continue to go up, and that's kind of what you've seen at the moment. But it could also go down. And I think if it's within your strategy and you've looked at it and you think, right, this is going to be a sound investment for me, crucially over the long term, then now is always a good time to invest. And I said this on the podcast that will go live tomorrow. Now is a moving target, right? Because people were saying, yeah, now is the best time to buy crypto. Now is the best time to buy Bitcoin. But that is a moving target. Now it could be today, it could be tomorrow, it could be next week, it could be next month. I think ultimately with this, mate, you have to make sure that, number one, you feel that it's the right thing for you to put your money into. Number two, you believe it's going to be the right investment for you over the long term. And number three, you have to keep yourself comfortable with the fact that it could fall off a cliff, or at least regress, and you might be sat with a little bit of a loss for a short period of time in the interim. But again, if you're investing for the long term, it doesn't really matter because it's just a bump in the road. But what you're experiencing there is kind of like this indecision that we all face around, could we get a better deal? Could it be a better deal? But it could just keep going. Um, it's a difficult one, mate. It's all psychological. It's all down to human emotion. But you have to try and regulate that and weigh up that risk versus reward equation in your mind and try and make the best decision for you. How much have I invested in Tesla? I've invested a bit in Tesla. I wouldn't say a lot of money, but I do have quite a bit in Tesla. That's relative though. So I think a lot to some people isn't a lot. To others, a lot or a little, or little might be a lot for other people. But I do have quite a bit in Tesla now. And I'm looking at, if it does come back down to around about the 800, 900, I might actually buy a little bit more as well. But Tesla for me is very much a long-term play. So it'll be interesting to see what happens. I was looking at it earlier today, and I don't normally check Tesla specifically because it can be very, very volatile. But I think it's like $1,200 a share still at the minute. I'll be very, very surprised if there isn't another share split coming along, stock split coming along shortly. And if he does do that, if the last time is any indication, we should basically see another massive run on Tesla because of that notion of the share price being a bit more affordable to investors. It's a really mad type thing, right? Because I look at it at $1,200. I'm like, it's choppy, and just from a buying point of view, you're like, one share for $1,200. It feels expensive, and we can talk about Tesla being overvalued. Obviously, that is a raging conversation, and people will still have that. But I think the price of Tesla is very much predicated on future value. They still have to get a lot right, though, to be fair. And the risks are definitely high, certainly with competition and so on and so forth. But we'll see. But I do have quite a bit in Tesla. Ola, here we go. Are there any accounts you can open for child investment that doesn't pass to the child at 18? No. The only thing you could potentially do, and this is, so I don't know, where you might have watched the video that I did where I was talking about investing for children, and it was with Beanstalk. And in that video, I actually mentioned the fact that, if you are invested in things like a junior ISA, for example, then you have to be really, really, really mindful that you're having money conversations with your children, like really early on. It's going to be really important because, if you are lucky enough to pay in, 9,000 pounds, which is the junior ISA limit, every single year. I can't remember what the number was. I think the number was something like $250,000 or something like that. The child would get at age 18, like based on a certain amount of like growth, market return. That's a lot of money, and like it can do a lot for children. I mean, look, if my parents were able to give me £250,000, I mean, when I was 18, I definitely would have. I'd probably be dead. I don't know what I would have done with it, but you have to have those conversations really, really early with kids. There isn't an account that pops to mind at this point in time where you can put your money away for kids and not have them take ownership of at age 18. There's nothing that comes to mind at the moment. I was going to talk about maybe trusts, because you can invest some money and maybe wrap something called like a discretionary trust around it, for example, and that will have the children as beneficiaries. Then you'll have the settler, which will be you. Then you'll have trustees who will manage how the money is actually dispersed to the child. That's something that wealthy people tend to do. You have to see a professional if you want to do a discretionary trust. So you need like a trust lawyer. But that's one way you could do it. But there's nothing that pops to mind immediately outside of the realms of the old child trust funds and junior ISAs that you can do for children where they're not going to take ownership of it at age 18, unfortunately. But yeah, shouldn't deter you. I think those money conversations become really, really important, like really, really, really important, to ensure that you're having it with the child. And just talk about what the money would have done for you. I mean, if I was at age 18 with £250,000, I mean, think about that. That's you won't be able to buy a house outright, but it could definitely be the difference between taking out a highly leveraged mortgage at 90% loan to value. You could get into a mortgage where you are, I don't know, maybe 70%, 30% loan to value. Mortgage can be paid off in 10 years. They're mortgage free for the majority of their adult life, which in turn gives them options later on to be able to do the work that they want to do and not have to feel as though they have to go to work to survive. It gives them options. Those discussions will be really, really, really important. This is a good one. In your opinion, what should be the best relation between fees and return percentages for investment apps? Or in other words, what should I move to another investment platform? When should I move to another investment platform? Um, I don't know that I can give you a definitive answer to this because it's very much personal to you and what you feel is acceptable from a fee point of view. Look, I've said it on the channel before. Cost is only an issue in the absence of value, so it's not always about fees. Like if you're just starting out with relatively small amounts of money, then yeah, obviously you need to think about fees because those fee deductions can impact your overall return. But if you're in a position where actually you're looking to invest and you're earning good money and you want to seriously invest for the long term, then the more important thing is not fees. The important thing is, right, who can I use and who do I believe out of all of these providers, all of these apps that has maybe the team skill set, track record to actually help me get to that destination. That's the important thing. And I'll give you a prime example, right? So if I look at some of my passive investments, they've done okay. They really, really have. But I've got one in particular that I use with Money Farm. I've got money with Money Farm, and they're an active manager, right? So active management, and I pay them a fee, by the way, because with my approach, I use a core satellite approach. So I've got ETFs, index funds. I've got people like Money Farm who actually look after stuff for me. Because even with all the stuff that I know, I'm too busy during the day to be sat there looking at charts and trying to manage. I don't have time for that. I'm more concerned about earning money than I am kind of making the money that I already have grow. And that may sound counterintuitive to many people, but in my head, I'm like, well, if I can earn as much money as possible and I can dedicate my time to that, that's more money I can actually put into my investments, which means that because I'm in the accumulation phase of my life, I will be able to have more money going in to accumulate for the future. So therefore, I'd rather spend my time focusing on making as much money as I possibly can. So, for example, with Money Farm, and maybe do a comparison of where you feel your funds are at the moment in their various guises. I've had it with them since maybe I think February this year. So since I've had the account open, they've done 14% return for me. So 13.99%. I've just rounded that up. 13.99%. That's an actively managed fund. Now fees, I can't remember what I'm paying them. I think I'm paying them maybe, I know it's below 1%. I know that for a fact. But they're doing all that for me. I don't have to worry. They've been really, really good. I actually need to make another video on these guys because when it was really, really volatile, they rebalanced my portfolio twice. So I got an email to say, we've rebalanced the portfolio because we recognize that things are quite volatile. This is where we feel that there are opportunities. So we've moved some money to those areas. That's what I want. Like, I want someone who's a professional looking after my cash and actually making those decisions for me because God knows I don't have time to look at all of that data and then decide, right, where am I going to push money? Because it's kind of like what Andy was saying there, right? You then get that indecisiveness in yourself because you don't want to get it wrong. I still get that even with all the stuff that I know. It's a human nature. But what they're doing as active managers is they're looking at data, they're looking at projections, they're looking at forecasts, and they're making decisions, a scientific decision on my behalf. So the relationship between fees and returns should always be considered in conjunction with, do you have the time to do what you will be paying someone to do? If you do, then fantastic. You don't need to pay those fees. But if you don't, then the question is there value in the service that they're going to provide you in order to give you back your time so that you can do the things that you want to do? If the answer to that is yes, then maybe you're okay with paying those additional fees. I think that's the important thing, really. For me, I don't want to be looking at charts all day. I can, but I just don't want to. I've got loads of other things. I've got tons of other things that I want to do. So I'd rather spend my time doing those and, giving that stuff to a professional to look after on my behalf. And if they do well, and this is another thing that's also worthwhile mentioning with, active managers, that, they're not really making money if you're not making money. So they kind of have skin in the game with you. Like if I'm paying, for example, 1% to Money Farm, if they're achieving a return of like 2-3%, well, guess what? They're only getting 1% of the net. Well, they're getting less in terms of their fees because they're not performing as well. Whereas if they perform really, really well, obviously that 1% is going to be much, much bigger because my money is growing. So it's always something that's interesting to kind of bear in mind. But this is the conversation between active and passive management. It's always raging, always going on. I just don't believe that, low fees is always the right route to go down, but it is very much a personal decision. Yeah, that's just a conversation there. You're saying, Andy, to buy. Yeah, I mean, look, mate, you just got to make sure that you're okay with it because, like I said, it can go up, it could go down. It's 50-50 chance. But if you think it's the right thing for you to do over the long term and it's the right investment for you over the long term, then why not buy? Why not buy? Hi, what's the best way and how do you choose shares to invest in? How do you decide how long to invest? How long, right, let's take the last bit. How I decide how long to invest is determined by my goals, first and foremost. So I have long-term goals and I've got mid-term goals, effectively. So depending on what that pot of money is meant for will determine how long I actually invest for. I say goals all the time. We started like literally 2020 with me making videos about what is your goal. So important. My goal tells me what I should be invested in, what I should not be invested in. So for example, for my short midterm goals, I am not under any circumstances, in my case, buying individual stocks for that. I'm not. Unless I see an opportunity for a very short term trade, then I might. So during the summer, I did a little bit on crypto. So I did a little bit on Bitcoin. I did a little bit of on Ethereum in the summer. Did okay there, but I rarely do that. Very, very rarely do I do that. My long term goals are years into the future. So for those ones, that's my Tesla. I'm looking at long term companies, and I'm looking at index funds and ETFs to help me get there, essentially. So in terms of how I pick individual companies, I will do fundamental analysis. It's all about what the company basically does. So what service do they provide? What product do they make? What's their client base? How long have they been around for? I'll be looking at what their competition's like. I'll be looking at whether they have a competitive advantage in their sector in terms of what they actually do. I'll delve a little bit into the financials. Now, with some companies, if you delve into the financials, it doesn't tell the entire picture. And to be fair, it doesn't all of the time. Tesla is a prime example. If you got back into Tesla maybe 3 or 4 years ago, you were lucky enough back then, the financials would have been horrible. So if you looked at the financials alone, you definitely wouldn't have bought Tesla because they were loss making at that point. So, the business, what they do, what they're striving to achieve, those things are really, really core, important things for me. But within that as well, is also trying to make sure that when I'm building a portfolio of maybe, I don't know, 20 companies or so, I've still got a solid foundation within there as well, because it is about risk management. So can I fit in a number of, I don't know, dividend aristocrats, for example, just to give me a little bit of stability? Then I go and speculate on top of that. Those are basic things that I will have a look at. But you should never really underestimate things like, whether a company has a strategic advantage over their competition. And this is, really, really important with the likes of people like Tesla, for example. That's crucial, really, really crucial, because the competitive advantage is what a lot of the future value in that business is built upon. It's not so much what's happening right now, it's what you're building up towards. So when you're buying a stock, you're not buying it for the price now, you're buying it for the future value or the potential future value. That's really important to bear in mind if you're looking at stocks and picking stocks specifically to build into a portfolio on your investment journey. Duchess, hi Pete. I've never traded before, but I'm interested in buying SHIB. Which platforms can I buy in the UK, please? And what are your thoughts on it? Okay, good question. Let's start off with a differentiation, because I think that's really important. Okay, let's keep our feet on the ground a little bit. Trading, investing, two different things, completely different things, two worlds completely apart. So if you're looking at SHIB specifically, I think you need to be a little bit careful. I'll see if I can bring up a chart on SHIB actually. 1 second. Because let me see if I can do it on here. I might have to rejig my entire screen just to show you this. So bear with me for 1 moment. Do I want to do it in there? Okay, let's try it in here, SHIB. Because SHIB is an interesting one. It's a very, very interesting one. I would ask why you want to go for SHIB and not one of the more established ones in terms of market cap. Actually, I can't do it on there, so I've got to do it here. 1 second. So why SHIB? So Duchess, if you can, let me know in the comments why SHIB and not like Bitcoin or Ethereum or something like that. Why is your eye on SHIB specifically? Let me know. Because yeah, it has been all the rage at the moment. But if I look at the chart on this, it is trading sideways at this point in time. So let me just see if I can just set this up, share my screen. I'm going to show you what I mean. And I think it's really important to bear some of this in mind. It's cheap. Okay. Not the best kind of like criteria to use when you're trying to pick like an investment potentially. All right, let's get that to a good size. All right, let me just get rid of your comments so it doesn't shadow all of that. Okay, cool. Right, so this is the chart for SHIB, right? So let me just expand this a little bit. Let's go up there. And it's really important to know, right? So basically, everyone has been on about SHIB because of basically this green candle right here. It's shot up massively. But if you look at where we are right now, it's trading sideways. And I've been paying a little bit of attention to this. You probably heard the story of the guy who bought $8,000 worth of SHIB, and it's worth like 5.7 billion or something like that. For the longest time, people were assuming that wallet was like dead, like he maybe forgot his keys or whatever it was. Last week, there were a couple of people who made videos who track crypto who were saying actually he started to move money out. Now, I don't know. This is speculation because you won't know for sure when you're looking at this kind of stuff. But the question is, what happens when that guy who has a large amount of money in SHIB starts to pull money out? Is it responsible for that? I don't know. I think the video that I watched said that he was moving something like he moved like 3 tranches of $700 million. Now, please don't get caught up with the number in terms of $700 million. Oh my God, it's amazing. Yes, it is amazing. But these things rarely, rarely happen. Like he took a huge, huge risk and it's paid off for him. That isn't going to happen for everybody. And the reason why I say that is because, look, if you're going to put money in, obviously put money in that you can afford to basically lose. But just know that we are here right now. It's trading sideways, it's consolidating. What happens and how you're going to feel if it goes down here? Because it could. You never know what's going to happen with this type of stuff. And the reason why I asked, why SHIB is on your radar is because I think it's important to acknowledge as well that crypto space is heated up right now. Yes, it obviously is. Will it be around on the long term? I believe that cryptocurrency absolutely will. But just like you would pick, just like you would start to build an investment portfolio and you're looking at strong foundations, so companies that have been around for a while, the same thing would apply when you're looking at, cryptocurrencies. SHIB, in terms of the circulation, and they're talking about, X amount of SHIB have been burnt and this drive towards a higher price. In order for that to happen, it needs monumental volume to push it to that point. Not saying that it won't happen and it can't happen, but the likelihood of it getting to, say, like $1, for example, is far, 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 far beyond what I can calculate. It might not happen. Whereas if you look at cryptos, maybe like Ethereum, you look at cryptos like Bitcoin, you look at cryptos like, I don't know, Solana, for example, Cardano, those are the ones that have real kind of like user cases where it's applicable in a certain way, particularly when it comes to Bitcoin because of the ETFs that have been approved and more that are going to be coming along. It's proved itself as a real store of value. Yes, there's still risk. No, you might not get the phenomenal returns that will make you a millionaire overnight. But, and I said this on a recording that I did with someone in London for their channel this week. Like, people talk about, great returns. Where can I get great returns? Phenomenal returns. Well, first and foremost, what is a phenomenal return? Is 14% phenomenal? Like, if you go back 10 years ago, you're doing 14%. You're the top performers before things like crypto came along. Now, if you are in Bitcoin, for example, and you still have the potential to literally get in at maybe 60,000 and have it go to 100,000 next year, potentially it could. That's a huge return. But now, because of these meme coins and the fact that you have a lot of them that pump and dump overnight and make billionaires overnight, it seems, that 30, 40%, those ridiculous returns that you're getting in the likes of Bitcoin, Ethereum become completely unrealistic because people have got their eye on those little things. And I think it's really important just to acknowledge that. So if you are going to go into SHIB, just make sure that obviously, you kind of understand what you're doing. Look, you could lose all your money. You might not. It may go on another rally. It probably will at some point in the future when people get back around to it. But you're taking risk. And if you're putting all of your money into that, just know that that's what you're doing. In terms of platforms, there's lots of platforms. So this is eToro right here that you can use. You can use it. Well, since you're new, you probably want something that is going to be relatively easy. eToro is not the cheapest to use, but it's very, very, very easy to get set up, and you can literally just buy it without having to confuse yourself around how things work. And some of the interfaces for some of the other apps that you can use can be very, very confusing. So you can use the likes of eToro, you can use the likes of Coinbase, you can use the likes of maybe even Bitpanda. There's lots that you can use. I use eToro for a portion of my crypto. So I've got my Bitcoin in here, I've got Ethereum in here, I've got Mana in here. I've got some other ones as well. But I've also got crypto in other places as well. But eToro is a good place for you to start if that might be helpful. All right, let me get rid of this. I didn't know this. Okay, maybe I need to have a look at this. They're in trouble with HMRC. I wonder why. Do you know why, Chris? Let me know if you have any more information on that. I need to do a cursory search. I hadn't heard. Northern Rambler. Hey, Pete. Love your content. Thank you. The S&P 500 is very buoyant at the moment, and I have a large bit of my stocks and shares ISA tracking it. Do you think a crash in the US stock market is imminent? Well, that right there is an interesting question. One thing we do know, and the markets didn't really react too badly on this news. To be honest, I've not actually tracked the US markets over the last week or so to be able to give you a proper answer on this, really, to be honest. But my views are this: we know that the Fed are going to stop tapering. Well, they're going to start tapering the relief, the program where they're buying assets. They're buying $120 billion worth of assets at the moment. That's going to start tapering off. So we know that that is going to be happening. Um, Inflation is an issue out there, the same as it is here. I think the reason why the Bank of England didn't increase the rates last week was because the Fed came out literally the day before and said, we are sticking, we are not going to increase rates. So I think there's still this notion that this inflation that we're experiencing is transitory. It's going to subside fairly shortly once everything is back to normal and supply chains continue to open up, so on and so forth. I think that's all very well and good. They've had issues with obviously the debt ceiling, which I believe they've sorted now. I don't know if it's still ongoing at this point in time. I think, in a nutshell, do I think that the stock market in the US would crash? I believe that they have a Fed that will do everything to ensure that it doesn't. So if they need to restart the printing program and continue with the QE, they'll do that. They will absolutely do that if they need to. They committed very, very early on in this whole COVID pandemic that they were going to do what was necessary, and they've been good to their word for that. Will it crash? I don't know. They will do everything within their control and pull every lever that they have to ensure that it doesn't. That doesn't then mean that there are other factors that they cannot control that might mean that they see a dip in the market. I think with this, we talk about risk management and we talk about, risk versus reward. The question that you have to ask yourself here is, are you well diversified? Because if you've got all of your money in the S&P 500 or in the US market specifically, the mere fact that you're answering this question, that you're asking this question, could indicate that maybe you've got too much exposure, and maybe, just maybe, you need to think about getting some exposure to other areas and tapering back on the risk that you're taking. Do I think that the US market will crash? I don't know. I don't believe that it will, purely because the Fed, they will do what they need to. But that doesn't mean that there can be something that comes out of left field that does mean that the market crashes. Hope that helps. There is this is a true statement as well. There is I can't remember the number off by heart, but there is a large swathe of the UK population that have zero savings, like zero. So, and I think we saw this, and this is one of the reasons why I believe, at least, that there was such a rush towards the stock market over the last 12 to 18 months, because the scammers got lucky with this because there were no savings. COVID happened. People had a little bit of money, were looking for ways to make money. Stock market. That saw the asset prices increase. Some of the returns that we've seen over the last 18 months. We've seen also a lot of money going to crypto, a lot of the pump and dumps. So people have been able to make ends meet and at least survive with that. But it is very, very true. A lot of people do not have any savings at all in the UK. But again, we do not get taught this stuff in school, which is the big, big problem. And it needs to be addressed from a governmental point of view, because it's a travesty. You're cheating, the population. You're cheating, the future generation that we build in this country. You're cheating them of really important knowledge that they're going to need just to survive in life. It's an absolute travesty. It really, really is. Guys, 93 people on here. Let's get these likes up to maybe 40 if we can, please. That would really, really help me. Thank you. Right, let's have a look and see what else we have here. All right, there's a question about the iShares So this is the BlackRock one, core S&P 500 ETF, hedged, same as the Vanguard S&P 500. Is there a difference? There will be a difference. It's hedged, which means that BlackRock have done something to hedge or, how can I explain this? To mitigate a risk. So, for example, if that ETF has been bought in US dollar, they may hedge it with a, oh yeah, so it actually says there, British pound hedged. So what they've basically done is they've hedged it so that you won't get the impact of the currency exchange. That's essentially what they've done. So where it says GBP, that's Great British Pound hedged. So it's hedged for any potential interest rate, foreign exchange rate differences. So there is a difference. Yeah, everyone's saying here, Andy, don't wait. Yeah, I mean, look, if you're gonna bite the bullet, but make sure that you're confident in what you're doing. Why are all stocks going up at the moment? Interesting question, mate. You know what? There's been a lot of money that's gone into the market, and I do honestly believe it's. Let's put it this way: if you could get a 5% return in a bank right now, there'll be a lot of people that would not be in the markets. Period. There is nowhere else to go. Like literally, if you want your money to beat inflation, which is the primary reason why people started investing in the first place, the market is the only place for you to be. And with interest rates on the floor and us facing stupid inflation, 5% by Q2 next year, April next year, there is nowhere else to go. So a lot of people have got money in the markets right now because it is the only place where they can actually get their money to work a little bit harder. If things were to reverse and tomorrow there was a 5%, UK savings account available, I guarantee you there'll be a lot of money that would flow out of the markets into those safer assets. Because why would you go and invest in the stock market and take the risk that you're taking with the stock market if you could get 5% on a deposit account? I think that's one of the fundamental reasons why the markets are so high right now. There's so much money sloshing around, people trying to make the money, work a little bit harder for them. And frankly, there isn't anywhere else to go at all. Would I invest in a gold ETF? I do actually hold some gold in an ETF as well. So yes, absolutely. It is a good diversifier. I don't have a lot in gold. I mean, again, this is where you're building a portfolio and you try to estimate, right, how much of your money in a percentage term would you want in something like gold, for example. So I think in one of my portfolios, I've got like a 10% exposure to a gold ETF. So yeah, I do hold gold. It's a good diversifier. All right, there's this one from Andy. 1 second. I have a IUSA 80%, R2SC 20% on InvestEngine with monthly direct debit. Do you think it's still wise for me to buy the VOO on eToro at the same time? Um, there are multiple ways that I can answer that question, mate. It's really, really hard for me to be able to give you a definitive answer without really understanding a little bit more about what else you hold and why the VOO is really attractive to you, mate. Um, so it's really, really hard to say. I mean, look, I can't see your overall portfolio, but you've got 80% in the US markets. Do you consider that a risk? Do you think that's going to be a problem? Maybe not. But whether you should buy the VOO or not would be down to the analysis of, okay, so what is that all about? What is the VOO all about? What exposure are you going to get that you haven't already got? What does that actually do in terms of actually delivering you closer to your goal? Is there a particular reason why you like it? I need answers to all of those to be really able to give you like, okay, the pros and cons will be this based on what you currently have. So it's hard for me to answer that, mate, unfortunately. Joshua, hi Pete. Is it possible to have a long-term investment ISA which I'm paying into monthly as well as trading on eToro/Nutmeg as well within the same tax year? You've got to be careful with multiple ISAs across multiple providers, the rule is you can't pay into more than one type of ISA in a tax year. I know that sounds confusing, but essentially what it means is this. So if you have an investment ISA, that's a stocks and shares ISA. If you've got that with, who did you say there? Right, so let's just say you've got it with Moneybox, right? So you've got stocks and shares ISA with Moneybox, which is where your monthly direct debit is going into. You cannot then go and have another stocks and shares ISA with eToro and Nutmeg. You can't, because you're breaking the contribution rules. So really, when you're looking to select your ISA provider, you need to be thinking ahead of time around what kind of things you want to be doing. So if trading is important to you, and again, trading, investment, two different things, they're not the same thing. They are not. Then you need to have that criteria in acknowledgement of the provider that you choose. So, for example, with the likes of maybe Vanguard, Moneybox, Nutmeg, you're not going to be able to do any trading with. eToro, you can do trading with, but the others you can't. So, if you mean trading and not investing, then you should be with eToro, not Nutmeg, not Moneybox, not Vanguard, not any of those guys. You can do trading with Trading 212 if you have an account already. But if you're trading and you mean trading and you're not confusing trading with investing, then you have to be using eToro and not the other person that you have your money with on a monthly basis. You got to follow up here. And how does tax work on gaining money on investments within eToro and Nutmeg? If it's in an ISA, you haven't got to worry, mate. If it's in an ISA, the returns are completely tax-free, so you don't have to worry. You don't have to declare them. Don't have to do anything. It's all tracked via your national insurance number, because when you open your account, they ask you for your national insurance number. So it's all tracked through there. So you don't need to do anything. And that's regardless of who you use, whether you're using eToro, Nutmeg, or any other provider. They track it through your national insurance number, so you don't have to worry about the tax or the capital gains. Right, okay. Do you think keeping some cash in stablecoins and earning interest on CFI performance is a good idea? Yes, dude. Listen, yes. Look, I've just spoken about interest rates being so low, right? Staking on, stablecoin. If you're staking, right, using stablecoins, it's probably one of the only ways that you are going to get a decent rate of return these days. You still got to be a little bit careful to make sure that you're doing your due diligence on the platform and so on and so forth, and you're not running into any problems with any smart contract kind of nuances and stuff. But yeah, I mean, if you're able to use stable coins or you're able to stake to get a little bit of interest, absolutely. Just make sure you're doing your research on it, though. This is a follow up. Another YouTuber said Trading 212 having issues and could be banned. Have you seen, or heard anything about this? No, I have not. Really? I'll be very, 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 very surprised. I need to Google this right now. Regulation protection. When was this? Bear with me just 1 second, guys. When was this? Oh, no, that's okay. I just did ban, and I couldn't find anything on bans to sell crypto derivatives retail investors. That's 2020. Okay, no. So let's do HMRC. I can't see anything just by doing just a general search here, mate. Maybe I just need to have a look into it a little bit more. If you have a link to that video, it would be great if you could send it to me. I mean, do you know who it was that mentioned it? I can have a look at it and see, and maybe do a video on my thoughts. But I can't find anything at this point in time, just from doing a cursory search around whether they've got any trouble with HMRC or potential of being banned. That would come up in Google. I can't see anything at the moment unless someone's able to provide me with a link. But yeah, it's not something that I've heard of, unfortunately, mate. Let's have a look at this. Is it okay to open stocks and shares ISA such as on Money Farm and a general investment account on free trade at the same time? Yes, that's fine, because a general investment account isn't an ISA, is not an ISA. So you can have an ISA and you can have a general investment account as well. That's completely fine. You haven't got to worry about any ISA rules there. I'm saying on here, is anyone else's questions disappearing? I haven't got any filters. I do have filters in my comments because people say that all the time. Oh, I posted a comment, it's disappeared. There are certain words that if you type it, it goes behind for me to actually sign off it being appearing in the comment section of my videos. The reason for that is because otherwise I get a load of like Telegram groups and all sorts of people basically posting spam, and my comment section is very, very tidy because of that, because I do have certain words that are filtered out for approval, but not on here, not on a live thing. So if you do have a question, mate, try and retype it and I'll get round to it. How do you make the most of GBP and USD change rates when you buy or sell US stocks within an ISA? To be honest, mate, I don't pay attention to it, if I'm completely honest. Like people, so this may knock a few people off and maybe annoy a few people, but this is when we come back to this whole conversation of fees. You have no control over the fact that you're going to have to pay an exchange fee, okay? None whatsoever. So don't worry about it. It's part of doing business. It's part of buying stocks. And you can wait all you want for the exchange rate to have a 0.5% move or 0.0005% move. When is that going to happen? You have no control over it. So if you're going to buy a stock and you've got to buy it in USD, you're going to have exchange rate, buy it. What are you going to do about it? You cannot control the exchange rate. So for me, I don't pay any attention to it. Yes, okay, I might factor it into the fact that, okay, there might be a little bit of a difference, but so what? It's the cost of doing business. It can work in your favor. It can work against you. The unfortunate thing is you don't get to control when and how it works in or out against you in terms of favor. That's just the cost of buying stocks. It's the cost of doing business. So I personally don't really pay that much attention to it, because I just think if I want to go and buy a stock and I feel that the stock is at a good price, at a discount, why am I quabbling over the fact that I've got to pay a little bit of an exchange rate fee? I can't control it. So it's all course for the par. A par for the course, I should say. Right, Kai. Love the show and thank you for sharing your knowledge free of charge. Thank you, mate. My question is, when DCA, is it best only buy when the stock is going down in red? If you can, yes. I mean, if you can get it like that, yes. Because with dollar cost or pound cost averaging, if you're buying in every single month and the stock is going down, you're getting more for your money as the stock goes down. It works the opposite way around if you're pound cost averaging in and you're buying on the way up. For each purchase, you're buying less for your money. So in an ideal world, yeah, absolutely, you want to catch them when the market is actually falling off. However, you can't control when the stock is going to be going down and when it is going to be going up. So what you're here is just put money into it every single month. And as the market flexes and moves up and down, you'll be picking it up at different prices. And over the long term, those different prices is what will compound your returns overall. Hi, I'm 22, thinking about doing long-term investing using Vanguard. What index fund should I invest in and how much per month should I invest to get decent returns in, let's say, 15 to 20 years? Invest what you can afford, mate. So the first thing you need to do is sit down with your budget, get a A4 sheet of paper and just literally draw a line right down the middle. You put income on one side, expenses on the other. You work out what disposable income you have left down at the bottom. Hopefully you have. So let's just say you have £300 disposable income. You then work out, right, how much of that are you comfortable with putting into the markets for the next 20 to 15 to 20 years without you ever touching it. So if that number is, and don't feel as though it's got to be a big number. The size of the number does not matter. What I generally tell people to do when I coach is I ask them to actually work out a percentage. So for example, if you look at your entire income, and let's just say, to keep math simple, you're earning £1,000 a month. And let's just say the amount that you can afford to put into an investment over the course of 15 to 20 years, once you've done your budget, is 10%. That's £100 a month. If you can get into the habit of just doing 10% every single month, as you earn more money, as you start to earn £2,000, £3,000, £4,000, £5,000 a month, that 10% becomes bigger. So it's all about making sure that you're comfortable with the amount that you're saving so it doesn't overstretch you. You can sacrifice if you feel like it to, maybe give yourself a bit of a challenge so that you're restricting how much money you're spending on just mundane things, right? But I think as well, when you're investing, it's really important to get balance. Balance is absolutely key. If it's too difficult, you're not going to carry it through. You're not going to see it through. So you want balance. You want balance between, okay, so how can you still, maybe go out with your mates? How can you still have a few nights out and, go for meals and enjoy life and, go on holiday whilst also investing at the same time? The whole point of a budget is to be able to allocate money for all of those things so you know what's going on at any given time. So that'll be the first thing you absolutely need to do. In terms of index funds, I would probably go for something global. Don't take that as financial advice. You need to do your own research on the index fund because there's a number of them in there, but I would go for something global. Reason for that is if you're investing for 15 to 20 years, you want to be looking at your risk appetite. So you want to make sure that you're not overextending. And the best way for you to get diversification is if you invest in a global index fund. So you're going to have America, Europe, UK, Asia, specific emerging markets. You're going to get a good exposure to a lot of the markets. So that's what I would tend to do, and maybe some things for you to have a look at. But again, you just need to make sure that you're doing your own research and you're happy with the risk element that you're going to be taking. So, there you go. I'm just trying to find where I am in terms of the questions. Okay, let's have a look at this one. I'm conscious of time now, so we're just over an hour. Instead of buying shares, do you think of buying 3-time leverage shares for the companies you like and keeping them for long term? No, mate. Absolutely not. No. Like, if you're using leverage, you're trading. You're not investing. I don't trade. I don't have the time. I don't have the patience, and I certainly don't have the acumen to be sat in front of a screen doing all the analysis in order for me to be able to set this up with and still be able to do the things that I do. So that's not something that I would do personally. And if you haven't traded before and you don't know how it works, I would strongly recommend that you spend some time on education first. This is an interesting one. So the SHIB billionaire was part of the SHIB development team. That would actually make sense. That would make sense. Let's have a look at this. This is interesting about trading 212. They have not done their annual revenue. They're 2 months overdue. See, how can you be 2 months overdue when you're a company the size of Trading 212? Like, that may sound like a really small, mundane thing, but that would really concern me. Like, really, really, really concern me, because you're a massive company. You've got a lot of people using you, but you drop the ball on your annual return. Like, for what reason? For what reason? That's interesting. That's very, very interesting. I need to have a look into that. Hey Pete, found you this week and I've been watching your videos. Would you say InvestEngine managed account is similar / cheaper version of Moneybox managed ISA? Thanks. Yes, it is. Yeah, it will be. I mean, because I think the fee on The managed side to InvestEngine is 0.25%. With Moneybox, you'll be in the 1% region essentially. So yeah, it will be a cheaper version of that essentially. Late on company filings. That's really interesting. Really, really. See, the company filings, see, they would have to do things to company's house, which is one thing. But if they're late to HMRC reporting as well, then that's another thing. I'm gonna have a good look at this and see. I might do a video on it this week. I was gonna do one on I'm gonna be doing a video on basic attention token. And it's a crypto essentially. Apologies. I'm going to be doing a video on that on Tuesday. It's a really interesting one. I'm buying that on a monthly basis at the moment. I think I've been using the browser, and I think that given where we are in today's society, where you had the whistleblower with Meta, because they've changed their name now from Facebook to Meta. I don't know if you've noticed it as well. The ticker has changed over too. Um, these companies, when you're using social media and using the internet, they're constantly bombarding you and advertising to you. Basic attention token basically rewards you for using browsers. I think that's a really interesting way to flip around this whole conversation around privacy and power. Like, we give away so much for using Facebook and Chrome and all of these applications, which are obviously free, but we're paying for it in other ways. And basic attention token kind of flips that on its head. And if you're using the Brave browser, you're rewarded for people advertising to you. So if you watch an advert or scroll past an advert, you're being paid for that. And I think that's a nice way of actually, flipping things on its head. So I'm going to do a video on that on Tuesday. I might do one on Trading 212 later in the week if I can find some more information on it. Um, My opinion on DAO, I can't really give you one, mate, if I'm completely honest, mate. I haven't really paid much attention to them. I know that they're very, very big in terms of how DeFi works and staking works. I know that, but I don't know much more than that. I've not really looked into them like properly from a research point of view. Oh my God, really? Interesting. Okay, I've got to really have a look at this. I've got to have a look at this properly. Um, yeah, I've got to have a look at it properly. That's very interesting. What resources do you recommend for setting financial goals, financial advisor, or books, etc.? Um, well, interesting you say this. Resources. If I do coaching, I provide a ton of resources to the people that I coach, essentially. So, for example, I go through the entire budgeting plan. So, even like yesterday, I did one with Fotis, who's a viewer on this channel. He booked her for coaching. We did a full financial plan for him for the next 12 months, like your budget, the entire thing, mapped out based on, because his circumstances were going to change. He's expecting the baby, so the income in the household is going to flex and move. So we've mapped out the next 12 months of his finances to know when he's going to be in positive, when he's going to be in negative, earmarked a couple of areas to say, okay, maybe pay attention to this because this is where you're going to be able to flex and maybe move things around to ensure that you're not kind of feeling as though you can't make ends meet. So those kind of things I generally provide in terms of actual coaching. Now, obviously, with coaching, it's one-on-one coaching, so it's my time, so it costs a little bit more than just a general monthly subscription thing. I did have one which I tested, but it was mainly a Discord group which gave access to the investment course, so I could help people with stock picking and all that kind of stuff. I'm actually thinking of developing something for the new year where I can make resources available on a monthly subscription, essentially, with meetups on a monthly basis as well. We can set goals and there'll be a bit more accountability, because I think a lot of people struggle with that specifically. They struggle with, okay, we've set a goal, but actually, how do we hold ourselves accountable to make sure that we're moving towards that goal consistently? They almost need like a big brother almost in the background to be like, have you done this? So that's what I'm looking to develop for next year, but that's still being built at the moment. And there's a lot of stuff that is that I'm thinking of based on having trialed it a little bit this year with Discord. I want it to be right. I think if people are paying a monthly amount to me, I want to make sure that they're getting value for it. And sometimes it's very, very hard to gauge when you have a pool of people that everybody's getting value from it. And therefore, I struggle with, okay, if everyone's not getting value from it, is it really worth it? Because if someone's paying me or paying a subscription fee, I want to be able to give, a good piece of myself. But, also I've got to be mindful there's a lot going on for next year already. I can't say too much, but when it's ready to come out, you guys will see. So I need to factor that in as well. But yeah. My God, trading 212. You know what? I need to have a look at this because there is a lot of you have asked about trading 212 this evening. And to be honest, because I got so much going on and because I'm looking at so much on a day-to-day basis, some of these things basically just I miss them. They're just not on my radar. This is really interesting. I will have a look at this tonight, and I'll definitely have a look at doing a video for it next week. Do I think COP26 has affected the market? I don't know. I haven't noticed it. The th- the thing with that is, right, it's very, very good for ESG or ethical funds. It'll be great for those type of things, and I think it will force companies to be a little bit more responsible when it comes to sustainability. So I think if you've been invested in a sustainable fund, you may have seen a little bit of an uptick. I can't say that I've noticed it myself, but that doesn't mean that it hasn't happened this week, and it isn't going to happen. It will definitely happen. It will definitely impact the market moving forward with some of the agreements they've actually come into, looking at some of the finer details that they had or some of the high level details that they spoke about. But I haven't seen it this week specifically. But I do think that it will affect the market long term because of the commitments that they've made. Are there any UK brokers that allow options trading on US stocks? Um, if you go to the likes of IG, I believe that you can with the likes of IG. I haven't covered them on my channel though, on this channel, because I don't trade. So I think if you look at the likes of IG, actually, do Fineco Bank allow options on there? It is a trading. They have a proper professional trading platform, which I actually previewed and reviewed on this channel. So I think the likes of Fineco Bank would actually would provide that option as well. No, you can within Fineco Bank. I can't remember which video it is actually. Let me just see if I can find the video for you on the channel so I can signpost you on what video to go and watch. But I'm pretty sure they do because they give you access to the US market, and that's essentially that's their shtick, basically. Um, this was some time ago now, so this would have been earlier this year when I did a review with them. They are very, 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 very good. The trading tool is a little bit daunting to start off with, but once you kind of like get your feet planted with how it works, it is extremely good. It is professional grade stuff. Professional use that level of software. Particularly when you start looking at some of the live news that come through from the likes of like Bloomberg desks and all that kind of stuff. And look at Bloomberg desk. Literally, to actually get a subscription to the Bloomberg desk costs thousands of pounds. Like I used to work for a discretionary fund manager, and like literally the licenses that they were paying for the Bloomberg terminal were absolutely astronomical, six figures a year. It's crazy. And you can get those kind of things included as part of the service that you get with Fineco Bank. So I've just found it. I'm just trying to find the right video though. The one that you want is going to be, and hopefully you'll be able to see this. I've just gone past it. Bear me 1 second. It's 2020. You want, let me just get rid of that. You want this video right here. So I think it says simple trading / investing and banking. So they do a 3-in-1 service. You can bank with them, you can trade with them, you can invest with them as well. you want that one. And I did another video just after it as well, if I could find it. So that video, by the way, was posted on the, where is it? That was on January 29th. I posted that video. And I did one, I think it was a little bit after that. I just need to go back one. I think probably in the February or the March. If I can find it, I'll tell you. Professional trading. Yeah, you want this one as well, which is the one on April the 6th. So you want that one as well. So those are the two videos you need to go and watch if that's what you're interested in. All right, okay, cool. So I'm conscious of time. We've done an hour and 15 minutes. I'm just going to see if there is anything else. Right, okay. Bear me 1 second. Let me just point this out, because look, you control all you want. If you don't like the channel, go find something else to do on a Sunday evening, okay? I can't always get to all of the questions. There are tons of them here, but we've done an hour and 15 minutes. So if you think this is hypocrisy, then go spend your time on something that you feel isn't hypocrisy. And, disingenuous of you. I'm spending my time on a Sunday evening for free answering questions. I'm not asking anybody for any money. Nobody's donating any money. Neither am I asking them to. So if you don't like it, go find something else to do. It's very, very simple. If you're on YouTube at 10:15 at night, posting something like this, you clearly have your own problems to be dealing with, mate. And there could be better things you should be doing. Like, seriously, go and sort yourself out, because clearly you've probably had a really bad Sunday afternoon or Sunday evening because family, partner, God knows, has ticked you off. And this is where you feel you need to take out your frustration. Doesn't work like that, mate, unfortunately. So if you've asked a question, I've not got round to your question, well, I'm not being funny. If you want a question from me, you can pay for my time. How about that? If you don't feel that this is good enough. But if you don't, look, let me just do this for you. There you go. You'll be gone. Anyway, someone's asking here, do I use Vanguard? Yes, I do. Someone's asking here, why are bond ETFs lower? Is because the underlying asset that is invested in is actually a bond. There are so many. Look, there is a lot here, guys. There is a lot here. I mean, literally, I can't even get to all of them right now. So, guys, I appreciate you for being here. But again, I've spent, an hour and 18 minutes on here. Again, on a Sunday evening, because I'm trying to help people. Like, I don't get paid for this. This doesn't generate me any money at all. I like the interaction and the fact that I'm actually able to help people. That's what it's about. YouTube as a project that I'm working on, this making videos itself does not pay my rent, does not pay my mortgage, does not pay my bills. Me spending this time here on the channel, evenings like this, do not pay my bills. So don't get that twisted, and please don't assume that because I'm on here that my kindness can be taken for weakness. At the end of the day, it's everything else that comes off the back of the YouTube channel: opportunities, sponsorships, working with brands. That's how I pay my bills. And whilst I do that, I'm also trying to be as informative and as helpful and as impactful to you guys as much as I possibly can. And it's fine. We're on a public forum, so everyone's going to have their opinion of what they do and don't like about what I do. The reality is this, guys: you don't get to control that. Okay, I'm giving out information for free. I've spent 16 years, paying thousands of pounds to be qualified in my trade, to be qualified as a financial advisor. I spent 16 years learning all the things that I talk about in these videos. I spent hours upon hours upon hours producing videos, making videos, editing videos for people's benefits. At the end of the day, it is here to help. I can't satisfy every single person. And I'm the kind of person, if I see someone who wants to call me out, listen, this is not a popularity competition. I didn't make it to the exec team of a Fortune 100 company by being a soft cookie. And I'm not going to tolerate trolls or anybody who feels as though I'm being disingenuous and I have no integrity on the channel. You're going to get called out. And if you do get called out and you don't like it, that's your problem. Go find something else to go watch. I'm not here to be popular. I'm not here to be liked. I'm here to be a voice of reason in a world where it's all about hype and hyperbole and people are making a lot of money ripping people off. If I was such a person, I would have promoted things like cash FX and I would be pushing pump and dump schemes. I don't do that because at the end of the day, I have seen firsthand how those kind of things can devastate people. I've seen it firsthand through my career in financial services. The conversations that I have here on this channel are all about the conversations that I wish someone had with me when I was 25 years old. That's why I started this channel. If I'm able to then build from here to amplify my voice, to be able to help more people, then that's what it's all about. But at the end of the day, I do not tolerate nonsense from anybody. So those kind of things, I will call it out immediately. And if you feel as though I'm paying too much attention to it, sorry, that's not your prerogative to be able to say. People watch me for free. It is available for free. I'm more than happy to provide and spend my time on these kind of things for free. And at the end of the day, if I can help one person, my job is done. And that's what I'm here for at the end of the day, so that even after I am gone, these videos will always be here. And hopefully there'll be a voice of reason for everybody who is interested in investing for the first time to be able to build wealth and actually have a comfortable life, because money is a tool and life is essentially for living. That's all it's about at the end of the day, guys. So I appreciate you for spending this time with me this Sunday evening. Have a good week. I'll see you on Tuesday. I will do some live sessions and maybe a little bit of news during the week as well. But guys, catch you later.